Yeah, thanks for putting this on, Bob.
Thank you. Thank you guys for having us here today. We're really excited about Francine and her team. As I mentioned earlier, I'm with an attorney-owned title company in Palm Harbor, and I will bring the closing to your customer. I'll do them myself. I'm a mobile notary. And one of the things I forgot to mention is that the third Wednesday of every month, we have Coffee with Counsel at New York Bagel Boys on 19 in Palm Harbor, where we have a roundtable discussion with attorney Michael Guju, and you get basically a free hour of his time to ask any questions that you want that are real estate law related. So we've got that, and then as I mentioned earlier, I do the social media training May 19th. I've been doing sort of a 101 class, and May 19th at Pro, we're gonna do a little bit more of an advanced class. And what I do is I teach you how to prospect via Facebook, how to turn Facebook into your own personal CRM and to pull business from that. So it's, in my opinion, it's a wonderful class. But, you know,
if I say so myself.
If I do say so myself. But no, yeah, so I can attest. And most of the people who attend get a lot out of it. I also teach you how to boost your open house listings and a couple tricks that you can do. So, and Francine's got flyers for that, but you would need to register on Pro's website because I'm not actually hosting that class. Francine and Pro are hosting it, I'm just teaching it. So I won't take any more of your time because you didn't come here for my pitch. You came here for Francine and the renovation class. So Francine, Shannon, and Denise.
Thank you.
Oh, who wants a shoe gift card?
No.
DSW?
I do. Hello.
I almost forgot.
Do you want to do those now?
Yeah. Oh, did anyone miss their card in the bowl?
Honestly, no double dropping.
All right. For the $25 for shoes. Leslie. Look at that.
See the power of positive thinking. Good job, Leslie.
Thank you.
You're welcome. You want to hold this.
Okay.
This one's for Chili. Tom Tagler.
Tom Tag. We got chilies. Yeah, he likes chilies better than shoes. Anyway. All right. Shoe schmooze. I need chilies.
Great. Well, first, let me thank Bob. This is so awesome to know that I met you less than a month ago, and here we are doing this. Amazing. We're very, very proud to be your lunch sponsor. Jim and I go way back, so I had a friendship with him and his family before that, so it's great to be in your presence, and we really appreciate the time. And Sarah, as always, you're such a great partner to us, so thank you for including us today. I'll go ahead and let the team introduce themselves, and then we'll get going on the good stuff.
Hi, good afternoon. My name's Shannon Correnti, and I'm very happy to be with Francine and Denise at our team over at Pro. I concentrate a lot in the Tampa area. Well, we go everywhere, but Denise is in Pinellas mainly. I'm in Tampa mainly, and then Francine's all over. She's our partner. When we're not available, she is available. So we work very well together. Tons of experience in our office. I've been in the business 16 years. Sales experience, account executive experience. I managed processors and closers for 8 years, so I have a full array of what goes on behind the scenes. And with all three of us together, not too much comes across our desk that we don't expect. So appreciate you guys being here today, and I look forward to presenting to you later. And Denise Drews.
Hello, thanks for having us. I'm Denise Drews, and I started my career as a realtor. So I've walked in your shoes. I feel your pain. I've been in the mortgage business about 30 years. I've done everything from sweeping floors to processing to underwriting to originating to post-closing, secondary marketing. And up until about 2007, I was an underwriter. And then the meltdown happened, and I was lucky enough to be able to not work for a couple of years. And when I went back to work in 2010, I thought, I should be a loan officer because, well, I don't want to be the boss of anyone but me anymore, but you know, the industry lost 75% of their licensed mortgage brokers, so I figured the competition's gotten real thin, and I'm an underwriter. So I am a loan officer. I originate loans like every other loan officer that you come into contact with, but I'm an underwriter. I have the answers, and if I don't have the answer on the tip of my fingers, my processor, Kathy, who's also an underwriter, has the answer. So I think that we can bring to the table a ton of expertise and no surprises. And some of you have done business with me and know that we can, if we say we can do it, we do it. If we say it can't be done, we're right. Thank you.
Good job, good job, good job, good job. So before we get started, I just wanted to share a little bit more about us. And thank you for letting us sit in your monthly meeting. I learned 2 very important things that we have in common. And I probably would have learned more, but I graciously went to help Sarah pick up lunch, which is you build your company the same way we build our branch. And it's very different than a lot of my competition. And what we do, because I know it's important to the integrity of the team and the trust and the loyalty, is I am a non-producing branch manager. So I don't compete, I support my team. So you truly get 2 for 1 when you partner up with us. Girls are on vacation, girls are busy, girls are doing presentations. I'm the backup 24/7. My history is also deep, 24 years. I started in processing. It's really the only job I've ever had. It's the hat I love to wear the most. We're lucky with the processors we have now because we've either trained with them or trained them. So our experience goes really deep. So not competing with my team, again, makes us really unique. I'm not putting my loans first or rushing my things through. I'm out building relations for them or supporting them at the end of the month. So that's really important, and our partners really appreciate that. And the second thing I learned is the crockpot term. We have crockpots too. We do. We have that borrower that's not quite ready yet, but I want to close a loan in December, and you want to sell a house in December. So we just stir it once in a while and check in and keep on top of them. And I love that term because we try to give everyone an equal chance and try to help with some of our experience and guide them and get them on track. So that was very exciting to hear about that. Awesome. So let's go ahead and get started. So I have a clicker and I have a clicker, and I have a.
You can attach the.
Oh, okay. Okay. And a clicker. So who in here has heard of the renovation programs, whether it's Fannie Mae or FHA? Oh, that's awesome. Who's done one in, let's say, the last year? Great. Can I ask what your experience was? Good, bad, ugly, fun, not so fun?
I'm actually under contract right now on a Fannie Mae renovation loan. I sell a lot of foreclosures, so
we'll see.
It's fun. It's not my first, it's probably not going to be my last. And the lender that I currently use is out of state, so I would love to learn more about what you can offer here.
Exciting, great. And how's yours going?
Everybody closed on it. It was a little bit of a challenge.
And they are, and I make no bones about it up front. It is not your 720 credit score, 20% down borrower at all. There's homework involved. We coach our borrowers up front that there's gonna be some work to do, unless you want me to pick out your bathroom. If you want me to pick out the bathroom, then I'll do it. But if you wanna pick out the renovations, then you gotta get involved, and we coach them up front, because if we get and set that expectation and we keep them on a timeline, then everything can go smooth in the 45 to 60 days that we warn you guys that we would need up front. If we can close sooner, great, but we again set the expectations up front with our partner and our borrower. We do know and have some partners outside that will help. We know that Lowe's no longer works with the program, but Home Depot likes to, so we are able to give out some recommendations. We do have some general contractors that we know work on the program, so we're able to help in that direction. And in the past, our realtor partners have had some great directions too. So we're able to help guide too, to help get the first few steps out of the way and get the ball rolling. Yes, Bob?
Just when you mentioned, I hadn't thought of this, the general contractors and such, in like Lowe's, do they have to delay getting paid until the end? How is it paid in draws?
Yes.
Okay.
So we pay it in draws, and it depends on how many draws you set up front and how much the amount is that we're doing for construction.
They don't have to wait ultimately
No.
60 days.
No, but there is everything these programs are designed to do. So if anything ends up sounding tricky, the underlying reason is because it's protecting the borrower and the investment. So if the contractor's not getting paid right away, it's probably because there's an inspection needed to check the work to then release the money. Great. Okay, so good to hear that, y'all at least know what I'm talking about. That's awesome. I'd like to keep it very interactive. Jump in. Girls, correct me if I say something wrong. Ask a question. Just keep it fun and moving. So there's 2 programs we're going to share with you today. First one will be Fannie Mae, so I'll try to keep that one in line so I don't confuse the 2. So this is going to be the Fannie Mae Renovation. The Fannie Mae Renovation Program. So those of you that are familiar with Fannie Mae, she didn't veer too far off. It's not like her pricing's crazy and down payments are crazy. She's keeping it very much in line with what she does so that we're able to navigate through the program. Because I said she, I do call her a she. Yeah. So it can be done, it can be used on a purchase or a refi. So if you have a buyer that has been debating on whether they want to fix up their home or they want to sell it, and they decide then that they want to keep their home and just do some renovations, great, let's talk about that. If you have a home that needs some repairs and you're getting ready to list it, but you already know or have already sensed what potential buyers coming in are not happy with, what a great time to put a flyer at the front desk, a flyer on the kitchen counter, have us help you co-host the open house and talk about renovations the whole time. So the benefits of the home style. Again, Fannie Mae allows a lot of things that FHA won't. So she's going to allow luxury items. People get really excited about that, but it has to be, I mean, you realtors know how to think for the market and the white elephant and the comps for the neighborhood. So we can't get a house and all of a sudden add gourmet kitchens and spas and backyard barbecues, but it will allow for things that are comparable to the neighborhood. So if it's that one house that just hasn't been updated and hasn't been upgraded and everyone now has a pool or everyone now has a nicer kitchen, that is totally what this program is designed to do.
Allows for pools?
Yes, Fannie Mae does. Allows for pools. Now it has to be comparable to the neighborhood. So they can't come in and put a $75,000 pool if everyone in the neighborhood has something pretty average, but absolutely. Okay. Investment properties are allowed, and we love to share this with our realtors that are in the investment world and are buying investment houses and maybe have that one that's just not moving. What a great thing to think of. It's conforming loan limits, so there's nothing new you need to learn there. It's the numbers that we're already working with that just increased lately. I don't know if you know, but Fannie Mae is now at 424/100, so she went up a tiny bit for us. And you can use up to 50% of the appraised value after the completed amount. Loan to values are the same. That's what we deal with now in our world anyway. When I created this presentation, we made them really short and sweet because there's only so much we want you to learn. We're not going to go into credit scores and things that are going to happen on the back end. It's what we know you want to know, so you're armed with the information to go out there and sell it and know at least 4 strong things about the program. And the 5th thing should be call us, and then we can help you walk through the rest of it and selling it to the borrower or your client. Eligible properties, again, easy. It's everything that we already deal with when we work with Fannie Mae. So your 1 to 4 unit homes, townhomes, PUDs, condos, modular homes, primary residence, second homes, investments, no manufactured homes, which Fannie doesn't like anyway. Renovations. Now, the Fannie Mae program will allow us to delve a little bit into structural repairs, which is great. So, fixing a roof. Can't put on trusses and add an attic and add a roof, but you can fix or repair the roof part. Interior renovations. I had a great question earlier, which was they didn't like the carpet, but the carpet was not damaged. They didn't like the counters because they're not granite people, but they weren't damaged. So that's completely fine. That is what this program is designed to do, is make the house your own without having to go get that second mortgage that we did years ago that then disappeared, which was kind of the birth of these programs, and now just roll it all in. Start day 1 on this renovation. Don't move in and then try to get the second and do it. You know, that never works. You do it in pieces or you never end up getting it done. So it can literally be things you just don't like. It doesn't have to be broken, damaged, or unsafe. If you want to add it into the loan amount, you want granted, you want glass sliding doors, you want hardwood floors. It's just a matter of qualifying with those improvements and taking out the stuff you don't like. So again, nothing has to be damaged or broken. It can truly be cosmetic. Now, if you had something like a bathroom that they didn't quite finish because the faucet's not there, then it works great for that stuff too. So it's very versatile on what it'll let us do. Hence plumbing, repair, and replacement. Paint and carpet. Now I get asked this a lot too. Okay, well I have a borrower, Joe, who loves this house and his cousin Vinny is a painter. Okay, exactly. So is Vinny licensed? Is Vinny insured? Great, let's hire Vinny. It can't be a weekend project. We're gonna be very strict. We're gonna protect the investment. We're gonna protect the borrower. And then there's a couple examples of the luxury items, hot tubs, tennis courts, gazebos. We've never really done any of those. We've dabbled in pools, but no one's really gone that crazy. But again, if the neighborhood calls for it, and I'll get into how the comps and stuff work, then it is up for grabs. Okay, so that pretty much recaps just what we want to share with you guys regarding the Fannie Mae product. Again, keeping it simple, I just want you to know what type of properties you can do, how high you can go, what you can and cannot add. Girls, anything we should add, keeping it simple for them?
Well, any of you who's had a buyer that spends way too much time on HGTV and says they can't possibly buy a house or live in a house that doesn't have 2 sinks in the master bathroom, we can do that on this program. So, I mean, I think a lot of times it's going to be more cosmetic than anything. We had a very sweet young millennial buyer recently who searched and searched and searched for the perfect house in the perfect neighborhood. Well, that doesn't happen in our market because our inventory is way down. So he found the perfect neighborhood, the almost perfect house, and he put his own touches into what he really wanted to have. And you know, one of the things he did was a tankless hot water heater. I mean, those are very popular, very trendy now. They're not cheap to put in. So I think that you're going to find this is going to work really well for your millennial buyers that just have to have all the things they're seeing on HGTV, but they're not finding in our current inventory.
True story.
Cool.
Yeah, Julia?
What about a mother-in-law suite? I find more and more people are taking in older relatives, but the homes are not readily, already made that way.
Now, if it has one and it's part of the property, we can fix it up. But we can't add anything that's not already affixed to the structure.
You can't do a little tiny
So we're going to fix anything that's already affixed to the structure.
Okay, so if it's just a bedroom on the corner of the house,
It's already there.
bathroom, could you add on to that?
You
Increase the
FHA, Fannie Mae won't. She's not going to let us add square footage or add on to the subject property. But we'll go a little bit into the FHA. They have a sister program that does that and allows you to do a full-blown rehab. So we can touch on that a little bit. Okay, Bob?
Well, a couple, just following up on that, when I showed properties, if there was a tree house, that was the mother-in-law suite. So my mother-in-law does not know how to log into this meeting.
Not yet, she doesn't. Not yet.
Not yet. You guys know that over my head. So walk me through the process then. Double appraisal.
Great question. Okay, so that's perfect.
Okay.
Perfect segues, because I want to wrap it up.
And how do we close on the deal? We close on the deal, then this pool of money's there, and I have a list of 8 things.
Perfect.
And okay.
Yeah, perfect. Because I want to wrap that one up, and I'll walk you right through the flow. So, realtor meets with a client. Client is interested in doing a rehab loan. They let Denise or Shannon know, because I'm just the backup and the partner. And we either meet with them or talk on the phone, however you do it, and we start talking about what they want to do. Immediately get a contractor involved or the vendors that they would want involved so we know how much we're talking. So let's say we've gotten all that decided. I'm using my realtor partners as a guide because the starting value of the house as is has got to be equivalent to my sale price or already going to be off unless it's over and I have a little equity walking in that could work in your favor. We are then gathering, you go into contract, everyone's happy, we're gathering the bids. Borrower wants to do $50,000 worth of repairs. We now have the bids in hand.
What's the purchase price?
Okay, so let's say 200 and they want to add 50. Okay. And we have they're redoing a kitchen and putting in some hardwood floors. And we have 50 in hand, bids in our hands with labor and materials. We're very meticulous about how this works because there's a lot of money moving around and the numbers have to add up. You don't want problems at the end, but we're involved. We'd rather be involved in all this because we want to make sure every time a bid comes in, it's exactly like we like. When we find out what the vendor is, we actually want to be part of maybe that final phone call after you've picked out stuff so that the vendor and I are talking the same language. We also have a list of vendors that have done this before. So we love giving out names. We love telling the client, okay, here's a list, interview and find out who you like. Partner up with who gives you the warm and fuzzy and maybe has the products that you want. And then we are involved, and if they know what they're doing, great. If not, it's not hard, but we're gonna need a very specific bid because numbers can't change later. We're gonna wanna make sure they're licensed, insured. We're gonna wanna make sure that they have 3 references and that, again, we're protecting that investment, we're protecting that borrower who's maybe a little excited about getting all these things done. We're gonna be the eyes and ears to help them walk through it. Jan?
So the home has to come in well under a typical appraisal for that neighborhood in order to do this, right?
No, it does not. It's going to be a normal home in a normal neighborhood, and say it's lacking updates, and the other homes in the neighborhood have updates. So it's going to appraise for what the market value is as is. If the neighborhood supports updated kitchens, swimming pools, extras, then we're going to take the sales price of that property plus the cost of the improvements that they want to do. That becomes acquisition. That becomes our sales price, more or less, and the basis for appraising. We appraise the house as if the work were done. Okay. And it needs to be supported by comparable sales with similar upgrades or amenities in that neighborhood.
So in our example, this house will have to appraise for $250,000.
Right, and the reason that, and that was a great, Joanne had a great question. So the house would most likely not be the biggest sell in the house, in the neighborhood, because then it would already have had those upgrades to comp out to begin with. So it is going to default to something that's not of immediate value because it's missing everything that they're doing to begin with. Make sense?
Yep.
Okay, so then we're gonna get those bids and we're gonna get that contract and then we're gonna get the appraisal done. And once he evaluates the neighborhood, like Denise said, and it's now comparable for the neighborhood, those two numbers should be added together dollar for dollar, which becomes our acquisition price. So we're working with a realtor partner that knows the neighborhood to begin with. We are working with, and a lot of times if a contractor is involved or home inspector, they already are great guidance up front because that's their job. And then we're working with an appraiser who is gonna know that neighborhood, see the bids and the product that we're bringing, and everything then falls into place. Got it? And then in the example Denise gave, that contract sale price came in appraisal came in $5,000 over that original. So we already started off on a good foot. We didn't get 2 appraisals, but we knew.
If it comes in at $230,000, does the buyer have the right to say, okay, I'm going to lop off these?
Oh, absolutely.
As long as that lopping off those items doesn't affect the appraisal.
You're back to the drawing board. Absolutely back to the drawing board. And that's a great reason to add to. Let's say the appraiser now has all these beautiful upgrades and all this nice stuff that you want to do. But as they're walking through the house, they notice a few things of their own. They can add to that list. And guess whose list goes first? The appraisers. So then we want to make sure we've added those in because he's going to be thinking of a safety and secured point of view. Yes, ma'am.
What if the contractor, this isn't a perfect world, the scenario you described.
Okay.
What if the contractor is not there's time limits, right, that they have to meet these repairs? What if something happens and that contractor has not met those time?
Okay, so you're talking after closing. Okay,
yeah.
So the work, you have up to 6 months to get the work done after closing. Up to.
repair money's held in that.
Yeah, when I said 45 to 60 days, that was contract time, because I want to make sure that everyone is upfront, that you might end up going with one vendor and then find a better vendor. We want to make sure everyone's happy, because it's not easy to change out. You can change out vendors through the process if someone goes out of business or someone moves, but that's not fun for anyone. So we ask for a 45 to 60 day contract to make sure everyone comfortably is happy with what's going on. And then after the day after closing, there's about a week and a half of paper processing to get it done, closed, filed on to that construction department that then handles it from there. And then you have 6 months to get the work done. But at that point, you're so close in contact with that contractor, and that borrower is probably asked every single day, when is my house going to be done, that they have a timeline of their own as well. Now, the good thing is that once that contract is closed and we're done, our realtor partners are pretty much done. You've done your job. You're out of the picture. You're pretty much out of the picture. Technically, we would be too. We've done our job. Financing has shown up. We've answered questions. We have a great reno department that handles everything, but it would be a huge injustice for us to not stay involved, not babysit, not make a call here or there like Denise and I do on the one week, just once in a while, making sure checks are sent and everyone's happy, because it can get stressful, you know, especially when you're trying to live around construction. Yes?
Yeah, I used to do construction for firm loans back.
Oh, great, great.
In the 80s, and it was, you know, you worked off draws as the house is built and it turned into a permanent loan.
Right.
And how does your payments work for the buyers that are like 70 to 60 days not in the property and totaling 2 notes at that point? Is the payment delayed?
No. No.
So they're paying on the whole 2.
Absolutely.
Even though
Now,
some of it's sitting in that, and that's fine, because it's out of the bank's hands. It is.
exactly. Now, in most situations, unless the borrower chooses to do an interest credit, they're skipping a month payment. You've seen that at closing, where they get to skip a month if you've ever bought a home. So there's 1 month in there, give or take. But again, all this is so planned out up front. Borrower's fine. He understands what's going to happen. Contractor's given timeline. Everyone is, I mean, you know, they've given a timeline. Everyone is trying to stick with what they've committed to. I've never seen it go awry. I've never seen a contractor say, well, I forgot to tell you. I mean, so much goes into these. And at this point, you either know you're dealing with someone reputable or not, and you get that feeling that, you know, they want more business. So they're going to want you to refer out, and usually it goes great. Tom?
I think that the thing that everybody has to understand is there are not 2 notes here. There's not 2 different loans. It's 1 loan, period. The money that is for the rehab is held in escrow, just like a bank whenever, you know, I used to be a builder myself. I used to have a general contracting company. And we didn't get paid until we passed an inspection and submitted whatever, and we got a draw. This is no different than that. So the builder that's going to be responsible for doing the work is going to have to go through the same process that if it was a construction perm loan, where they're pulling draws as the work is done. So they're, you know, you talk about controlling the timelines and everything. Well, you're not going to get paid if you're behind. You're going to have to meet certain benchmarks, just like you do in a regular construction job, to have the work done and completed and inspected, and you know, submit to their financing company for a draw for that portion of the work. So
exactly.
Same as building a brand new house.
Exactly.
So here's my confusion. I had recently, my stepson was telling me, I'm going to help so-and-so because he had some kind of weird loan and he didn't, you know, and I kind of figured out in the conversation what he was talking about was a 2 or 3K. I'm not really familiar with them. He was asking me questions. I mean, is that possible? Can he do that? Can he? I was like, you know what? I am so sorry because I really don't know. And that would be a question that I would just hand over to my finance person because I let professionals handle their job. But I really, why I'm here today is I was confused because apparently this contractor did not meet those deadlines.
Scary.
From what I was hearing from him, if the house didn't pass the inspections by the timelines, he could lose the house? I mean, was I misunderstanding? Trust me, he doesn't know anything about real estate in this.
Yeah.
So I was like, I don't understand how that works. Is that how it works? That there's inspections that need to be by Fannie Mae?
No, not her. Now, that could be a Fannie Mae property, and there could be a home. There's also Homestyle does stuff on Fannie Mae properties, which
Okay.
only a few lenders do those. So that could be a Fannie Mae specific something. Of course, anything could go bad. You could have a contractor
That just completely
moves to Italy. So, but lenders, I mean, these are our investor that does these programs, this is like one of their main sole products. They immediately would have a backup and a phone call, and I mean, we would never take a house away from a borrower. I mean, the borrower would have to be at fault or some fraud or something would have to be detected.
I'm sure there's more to the story
Right.
that wasn't being expressed.
How fun to have to answer that question.
Using your example of the $50,000 renovations, but what if it becomes $45,000? What happens to that $5,000?
Okay, great question. So before we stamp it clear to close and everyone head to closing, everyone has signed off that they're happy with the numbers. Contractors signed his little paperwork, agent, I keep wanting to call him the agent. Your client, our borrower, has signed all the paperwork. Everyone is happy. Underwriters looked at it. Now, what we do is that there's a 10% contingency reserve added onto that $50,000 because there will always be an extra box of nails you need. There'll always be a broken faucet something's always going to happen. So we never end up with too much money in that situation because we've finalized numbers, but we do add a cushion in there because the last thing you want to tell a borrower through this hecticness is, can you write a check for $200? We need 3 more pieces of plywood or something crazy. So that 10% sits there. We do not tell our vendor partners they have it. We wait till something comes up and then say, okay, hold on. We are able to help cover that. We don't need them to find a reason to spend 10%. And then if we don't use that money, it goes straight to a principal reduction to the back of the loan. So these programs have been around since, they're so finite. It's so clockwork, the way they work. Again, there's a work that I don't want to, there's work that goes into it. The borrower has to stay diligent. They have to understand that when we need it, we need it. We make sure that we give them deadlines and timelines. If I ask for it on Monday, I need it by Wednesday. I talk to them on Tuesday. But if you do the program right, at the end of it, they can have an amazing house that they're moving into with, some fun along the way. Yes?
Since all this is done before closing, being on the listing side of one of these loans, how many visits is the seller expecting to?
Oh, goodness. I'm not sure. That's a great question. It could be a few because being on the listing side of one of these situations, how many visits and open doors visits do you need to make? Now, I want to say in the beginning, we've had our realtors schedule things where everyone's hitting within a 2-day period, if at all possible, and getting them in and out, especially if it's tenant occupied, or pets and all that stuff. But it's the nature of the program. We do our best to try to corral them. Hopefully the seller and the listing agent realize that they're selling a property, and we're all, and the end goal is the same, is to get everyone moving that right direction. And if they've agreed to do it, then we help to set that expectation up front too. And I tell people too, jokingly, whether I'm doing a 30-day contract or I'm doing a 60-day contract, that is not, I'm only in your life for 30 to 60 days. If you can hang in there and you commit day one to do it, we want the loan off our desk as fast as we can get it off our desk too. So, just hang in there with us. Let's look at the rainbow at the end.
So is the seller paying a commission on the $250 or is he paying a commission on the $200?
Yeah, the part that's added on, your contract sale price doesn't, we're not going to amend your contract via any kind of addendum. We're going to amend the numbers on our system. It's like we're giving the borrower a second mortgage and just slapping it on top and doing everything at closing, but one interest rate, one close, one monthly payment.
So the house is being sold for $200, although the loan is for $250. So all the commissions and all the percentages are going to be based on the
because that's your number, whatever they agree to do above and beyond. Because that's technically not reality. It's not $250 till I've done those proposed changes.
Okay, so I'm just thinking,
No.
Okay, so now that house will be on the comps for $200, but really it's a $250,000. So it'll be, when we're looking at comps, that house. So
Yeah, but the
everybody's got all these new upgrades now afterwards. That's why appraisers call you and say, would this loan have any difference?
There you go.
Sometimes they do that.
Good.
They do.
Good, there you go, because that's a conversation I'm left out of, so good to know. I appreciate that.
But when you look at comp up in the MLS, if it says that the financing is FHA 203K, you know that it had improvements done, so you need to call and find out what kind of improvements.
Right.
Great.
Right, okay.
Or Fannie Mae home style renovation. Great.
One quick question.
Yeah, no, sure.
Two quick questions. The answer to this is most likely no, but can you offer a renovation loan on a sinkhole property to repair the sinkhole?
Okay, that's a great question. Now, can you offer renovation on a sinkhole property? What the problem we've had with our sinkhole properties up front is that we have trouble with insurance playing along before I can even get to that point. So it changes often because we're in Florida, so I'd rather look it up and see where the investor sits these days with sinkholes. It's just it's an investor call, unfortunately, and they're going to be checking the neighborhood too to see what's going on in the neighborhood, if it's a perpetual problem kind of thing. So it's a sensitive area, but I will check into it.
And question number 2, suppose roofer A was on the contract to do the bid, post-closing, the homeowners decided they want to use roofer B. Can they?
Okay, so at the time of closing, they would have had to express why roofer B is still in the picture to us and why they don't feel comfortable with roofer A. Once you're done, these numbers are pretty much set in stone and it should run smooth like clockwork. So we would have ironed all that out way up front. It would be very tricky. So if something catastrophic happened, and that's why you need to now find roofer B, that's a different scenario. But we wouldn't encourage anyone to have a backup ready. If you're not comfortable with who's doing it, then maybe we need to do a little more work and find someone you're comfortable with. That makes sense? It's just gonna cause headache for everyone. Plus their bid could be different and then trying to change numbers at the end. So we would make sure we just counsel our borrower enough to know that they're happy with who they're using, or let's go find someone else. Did you have a scenario?
Well, like I said, I'm in the process right now of a Fannie Mae renovation loan, and it's not pretty.
Yeah. We can talk after. Let's talk after. I might have some ideas or hopes for you. Was there another question? Hand over here.
I had a question.
Yeah.
Do y'all do loans like this for pre-existing owners?
Like a refi? Okay, so the borrower already owns a home and just wants to jazz it up a little?
Yes.
Absolutely.
As an agent, you're constantly trying to refer people and, be a good agent. So like if I had a friend that says, I'd really like to put a roof on my house, but I don't have the money.
Oh, absolutely.
A program that would work for them.
Yeah, yeah.
I'll do that.
Correct. As long, the equity's there. Now, this program isn't made to recreate the attic and add trusses and recreate storage, but it will definitely put on a roof.
But the cost of roofing today. It's
And some roofers offer financing. So what I say too is if your client, our borrower, is one of those that have sat on the fence with a 7.5% interest rate because they just haven't read it in the paper enough that it's time to refi, and we can lower their rate and cash them out and get a roof, it would beat anything a roofing company could do as far as financing. So thank you. Great question.
The interest rate, will that differ from a regular company?
It's a tiny, tiny little difference, and it's still mainly based on the borrower's credit score and the loan to value.
So that particular renovation, is it different than the one that you normally would get, or is it combined as one?
What other one you would get? Explain this to me again. Okay, so the renovation has a tiny little adjustment to the rate, but it's still mostly based on the borrower's credit score. So if they have a great credit score, it might be a tiny blip that they don't even feel.
Okay, hang on and talk numbers to me. Tiny to a lender.
Oh, an eighth, a quarter. Yeah. Yeah. And the strong, no, sorry. Sorry. Oh gosh, no. No. And the stronger the borrower, the smaller the adjustment. Absolutely, yeah. Thank you, Tom.
What are the points on this?
No, there's no points. We don't charge any origination points.
LTVs?
95
95?
for Fannie Mae.
On the whole ball wax?
Yep.
250 in our
Yep.
in our
Yep, for a primary.
Our loan to debt ratio, what's the max?
The back ratio?
The loan to debt ratio,
Fannie likes to hover around 45. A really strong borrower I can get to go a little over. If it's much over, then we automatically start thinking FHA. I know, I do that
It's 5 o'clock somewhere.
too. So if they're within FHA county loan limit, it might be then a good idea to talk FHA, since the renovation program is.
There's only one ratio now. There's no housing ratio in back, total back.
There is, the housing ratio gets angry a little bit if you're going over 40 or you're pushing it, but it's not like it wasn't the 34. Yeah. Had those committed to memory. Jim?
Yolanda wants to know, can it be combined with bond money?
We don't offer bond money program. We choose not to do that program, so I would have to ask and find out for her.
I asked Jeff White and he said no.
Got it. Yeah. I love him. He's a great guy. Okay, so good answer. There you go. Okay, so ready to jump into FHA? Okay, so let's do it. So now forget everything I just told you. And let's think FHA. Okay, so for those of you that have been in the business for a really long time and know the 203K, know that it started as a full rehab. It's a rehab, FHA's rehab loan. Add on, finish a house that's not done, the contractor left and there's just walls up, doesn't have a roof, doesn't have this, full rehab loan. After doing these for years, FHA stopped to analyze the loans, and a lot of people were just doing cosmetic things like, putting in hardwood floor, changing out French doors from glass sliding doors, adding some granite, fixing up a gourmet kitchen. So they said, okay, hold on a second. That's a lot of work for cosmetic stuff. Let's do a category for this program. We'll call it our Streamline. We'll cap it at $35,000, and we'll let you do anything cosmetic that doesn't touch structure or add on to the house. So again, can be ugly, can be outdated, doesn't have to be broken, nothing like that. But FHA is gonna think a little stronger through those safety goggles. So they're gonna also, that appraiser is gonna go in thinking FHA too. So just remember he might have a little list of things that he would recommend. His list always comes first. So, and it also can be done on a purchase or a refinance. So what's not allowed, let's just start with the bad news first. They're not gonna allow all the luxury items, which it's not that big a part of the market of that program anyway.
If Fannie's a she, what is FHA?
Oh, I don't know. I'm just kidding. Yeah. Yeah.
I want to make sure I get it right.
Yeah. Well, it's funny because I say she when I'm dealing with Freddie versus Fannie, because then there's a he and she. So it's funny because I never named FHA. So we'll call it it. We'll call it it for now. Okay, so none of the fun stuff. But again, that's not usually your FHA borrower. They're not going to move into Avila and want chandeliers. That's just not my borrower. Eligible properties, again, going to follow very strictly what FHA, the precedents it's already sent. They're not going to recreate anything for this program. So if you already know that FHA condos have to be approved, guess what? They still have to be on the approved list. If you know that FHA likes this and that, that's not going to change. They're not going to recreate that. They're just going to work pretty much within their guideline and let you add on this program. Okay, this one I love because there's a lot of things that they'll let you do. Again, no structural, because no one really likes that too much, but there's a lot of things that they'll let you do. Like Denise had mentioned about adding I mean, it could even be stuff that's not pretty. Let's say they just need to fix the air conditioning and the heating and the hot water, and they like the inside of the house. They just don't want to pay for those other things. Great! It doesn't have to be interior cosmetic stuff. It could be things just to get the house up to par. For all those efficient energy discounts that you get. The one I love the most is that it allows for improvements for disabilities. I can add a ramp. That's awesome. Come on. I can add a ramp in the front. I can add the ramp in the back. You can add things to make it disability accessible. Lead-based paint. Who's had issues on FHA house with lead base? they'll allow for the treatment of lead base. Anything on here that catch your attention that you want me to?
They won't cover a roof then.
It doesn't cover the trusses and stuff, but it will replace a roof. So they don't want the house to have no roof and you're building an attic, but you can put on a roof.
So really, these are all allowed?
Yes.
I would, that title thing not allowed to.
Well, yeah, it's just, it repeats that the structural, so when you're looking at the roof, there's no structural part of the roof done, but if the roof is there, you can put a new roof on the trusses.
So these are all allowed?
Yes.
Okay.
They love to just keep reminding you, especially on that page, that it doesn't, anything that would delve to the next level of structure is then going to be questionable.
If you're looking at repairing a roof and you think it only needs, new plywood or new shingles or tiles or whatever, and there's going to be a compliance inspector involved in doing all the FHA ones. If the compliance inspector comes in there and looks at it, or if in the process of the roof coming off to be repaired, they determine that it's structurally unsound, your trusses are shot, then that is going to flip it to a full-blown FHA reno, which is a completely different loan. So,
which is doable. It's just a different animal.
Doable, but it's just going to cause another delay. So when you're looking at the possibility of doing a roof, make sure you've got a good roof inspector who has looked at it and given you a good initial opinion, because structural issues discovered after the fact can be a problem.
Great, and that's another great reason to repeat that your home inspector could be a great set of eyes, because he can find the things that are close to needing repair or replacing, and that could add it to the list, As long as they qualify and they're okay with the number, how awesome to have it all financed out the door, one stop. Great. And that's pretty much it for the FHA. Again, we only want to arm you with the information that you're going to be needing to talk to your clients as you're walking through the houses. We want to be that next phone call. We want to delve into credit score and this and that and the finite details. So a few things I tell my realtor partners is when you're walking, and I'm a perfect example of it. A very unusual taste. I like things very contemporary. I've done the browns, I've done the granite, I've done the stainless steel. I like things different. So to have a seller go in and spend all this money to make it look pretty when I would have rather them leave it, because I walk in with a little vision and save that money, I would have rather have done it myself. So watch for those signals, watch for those eyebrows, watch for it's the perfect neighborhood, it's school district, but, oh my God, great segue. But what? What did you not see? What did you not like? So much of it can be changed and fixed. Watch for, like Denise, we get that. I love everything about the house, but the master bathroom didn't have 2 sinks. Are you kidding me? Are you kidding me? Okay, then y'all need to be separate in the bathroom. We'll give you that second sink. So that's a great segue to at least introduce the program. We love doing flyers. We do open house flyers. So how great to already have something at your open house or your caravans that talk about this in a house that is already set up to maybe get that idea in their head as they walk in. A lot of clients and buyers don't have that vision. They walk in and they see avocado carpet and that's it, they're out the door. Okay, well hold on, it's just carpet. Carpet comes up, paint comes off, wallpaper comes off, wood paneling comes off. Like, great way to segue in. We know we're short inventory as it is, and there's so much inventory there that just needs a little facelift, or a borrower to walk in. And I've even gone on appointments with the realtor and said, okay, hold on, picture this. Like, okay, so, you just have to get it in their head and get them thinking about it. So that's where we're here to help you do. Get the ideas going. Yes?
How about landscaping? Would that be good?
Yes, and it has to be comparable for the neighborhood. So landscaping is allowed.
Like reside.
Yeah,
it's
basic
a
stuff.
requirement in the neighborhood to have grass.
Yes, yeah, even more so. Yeah, deed restricted area, you have to have grass. Yeah. Perfect. And then I'll just finish up the flow. Tom pretty much handled it great for me. So we're in the process. We've got the appraisal done, and now we're headed to closing. All our numbers are finite. Everyone's happy. Everyone's signed off on it. We're moving forward. We close. Everyone's out of the picture. A week and a half after everything gets going, the work starts. We stay in touch. We make sure everything is moving smooth. There's draws are set up on how the contractor or the vendor wants it. Now, if they are using 3 vendors, hardwood floors, cabinets, carpet, they are free to use just those 3 vendors independently. If they add a 4th, then a general contractor is required, because now there's a lot to handle and too many phone calls and people to babysit. And we love the fact that there's a general contractor. You can also add in interior design, someone that's going to help you, or a space planner to help you figure that out. That could be incurred as part of the cost. And then we stay in touch. We usually will update the realtor partner at some point as well, like, talk to Joe and they're happy and open house is set for 2 weeks from now. But it's a great program. It helps move inventory. It's not going to be something you probably do a ton of, but we just want to share the knowledge, so when you walk in, you can go, hold on, I saw the eyebrows. They love the neighborhood. Hold on, we can do this, this, and this. Or what would you envision there? What would you like? What do you have now that you'd want? What did you see in the other house that you liked that maybe we can do in this house?
Great conversation starter. I mean, I would say less than 3% of your clients are actually going to utilize it, but now they're in love with you and you latch them in because you're eyeball to eyeball with them, and now you have another tool.
You're selling another service.
Open house people they walk into didn't mention.
Selling another service. Exactly. Exactly. So, any more questions? All right, so we have, oh yes, go.
Flyer cooperatively, adding the renovation loan on a house that needs a lot of updates?
Yeah, we can do whatever you want. We can do, and I know you work with Denise, so she is on Rate Plug and does flyers that you just can't even imagine. So, I thank you. Well, I'll take any testimonials that y'all want to give. It's American Bank Shares, that's completely fine. Tom?
Yeah, Francine, what you covered with Fannie Mae and the Streamline is probably what most of us would end up using.
Correct.
The FHA 203K also has the major one.
The big one.
Which includes things like room additions and finishing a house like you talked about and so forth. But it's like, it's Denise, right?
Yeah.
Mentioned, there's a compliance inspector that gets involved in that. When I was in the REO business, I used to sell a lot of houses through FHA 203Ks on the major ones, and they'd have the compliance inspector come in. That process takes a little bit longer, but you can sell stuff that's fallen apart, basically, if the buyer is willing to go through the process.
Thank you. And then you stepped out, but sinkholes came up. And I haven't delved on sinkholes lately being added in, so I just wanted to pick your brain. If not, I told her I'd get back to her.
I don't see why it would not be allowed on the Fannie Mae program. The 203K streamline, that's going to be a full-blown 203K, but I don't see why it wouldn't be allowed on the Fannie Mae program, because you've got a finite value of a house that has a sinkhole. And then once the sinkhole is repaired, there goes your value up. And I have a client that does sinkhole repair, so I can ask him if he personally has done some on homes that did have financing, but I don't see why not, but it's something we would have to double check.
Yeah, great question, and I'm glad you brought it up because I'll add it to the slide to nip it in the bud next time either we can or can't. So thank you for that.
And Francine, LTV on the FHA and the 203K and 203K streamline are still 96.5?
Yep. Amazing. Yep. Yep. They're smart enough to know that we need to move inventory, and the program's just amazing. So great. So we have a little bit of time left. So I had something interactive I wanted to do, some AMAs with you guys, because we are here to talk about renos, but with our past and our depth of knowledge, we do have underwriting experience too, and we know that everyone has been in a situation where you've had something tricky or it didn't make sense, or you know something's coming up that you want to just bounce some advice or ideas over. So the girls will come up. We just wanted to open it up to anything that you want to ask us, pick our brain, you've had happen before. We brought some topics of our own of unusual situations that have happened that we'd want to share, like how we addressed it and how we handled things. So if there's anything from the floor that you want to just ask us, we'd love to give some feedback.
I have one.
Sure. Go, Joanne. JoJo.
I love her laughter.
It's addictive.
Underwriting. When
two varying opinions of flood insurance due to a current map being updated from, like the builder went in and built out the community, built it up. And that's not, or it is reflected yet, but yet the lender says it needs flood. And the seller says, no, we aren't paying flood because, it was blah, blah, blah. How do you do you guys all look at the same thing? Obviously that's no is the answer.
We do. There's two ways of
should.
looking at it. The first way is we're going to look at the survey of the property, and if no part of the improvements touch the flood zone, then we would not require flood insurance. The other method, and this happens a lot with your scenario builders, is that they do a build-up, and you apply for what's called a LOMA, letter of map
adjustment.
Yes.
Letter of map adjustment or letter of map revision. And there are some surveyors, actually, I've run into them in the area, and if you Google them, that they will do the work and they'll submit the paperwork, but you need to get a LOMA or a LOM-R.
Lomer.
There's a company called National Flood Experts. If you go to nationalfloodexperts.com, they will actually go out and reassess for you. Like if it's just a corner of the parcel that's in the flood zone and they're requiring the flood insurance, they'll go out and reassess that and have it rezoned for you for $500.
Cool. Good to know. Thank you.
Nationalfloodexperts.com. Brad Hubbard.
Thank you.
Yeah, it is called a LOMA or a LOM-R. Letter of map assignment or letter of map revision.
Awesome. Great question, Joe. Great question.
Well, I'm in the solar business, and we use a lot of outside financing, but we want to use this type of financing. And the question is, because it's not on a lot of roofs yet in this part of Florida, how can we use, what kind of method do they use to appraise? Are they using, is there a cost basis appraisal they can use or something? Because now not every house in our neighborhood is going to have a solar array on it.
To make it comparable?
Because I know they do an energy part of the loan. That's how we first started talking about it. But I just wondering, just on the regular reno part of it, if somebody wants a roof and some other things, do we have appraisers that understand the different method of appraisal? Or
To do the energy efficiency part, you have to have what's called a HERA, home energy rating, done by a home energy rating inspector, and they're hard to find and they're very pricey. Solar's crazy enough in our market's kind of a crapshoot. Hopefully you can take the cost of the solar versus the cost of a heating system and maybe factor that in, but I don't know. That's one I've not run into.
That's a good question.
Often enough to have a good answer for you.
we have a breakdown where you can show how much it's going to save you on your electric bill and all that.
Right.
Which is very conservative as well. And it shows per watt. And because I've had some appraisals where I've had clients that refied afterwards or sold for a lot more and appraised for a lot more. On the other hand, I've had some where the appraiser didn't even include it.
Oh, wow.
It was just lack of, they didn't need it, or just lack of comps in that area or whatever, I don't know.
Interesting. And there's some upgrades too. You always have that borrower that says, oh, I've done so much work to the house, and then they get upset that it gives no value. Well, you're expected to upgrade your house and do energy efficient things, and you're supposed to upkeep and have pride in ownership. So you wonder where that falls. Interesting question.
I can call around us too.
Something I'm saying, California is not unusual, but here, so that's
Yeah, and you see them more often too, so it could definitely be something that gets factored in. I know.
We're probably blowing it up on it.
Great. Any other questions? All right, I wanted to throw out something.
Do many of you do condo loans? Just want to throw out there. The realtor that just left a few minutes ago was asking me about condos. And condos is one of our fortes at American Bankshares. We're a direct Fannie Mae lender. So we do our own condo reviews. We're not going to outside sources. And my home office is in Miami. And if a Miami lender doesn't know condos, then I don't know who does. But that is our forte. I can do condo reviews. I can look at the financials, the budget. I can tell you immediately if a condo is Fannie Mae warrantable or not. I'm not going to make you and your buyer wait till the last minute and go, oops.
I know before I order an appraisal if a condo is Fannie Mae warrantable. And one big change that a lot of people aren't familiar with yet is if you're doing a condo for a primary residence or a second home, we don't care how many rentals are in that project. We do not care. We only care if it's an investment property. Then you're going to be held to that 50% limit. So please do not be afraid of condos. I've been watching condos ever since the meltdown, and little by little they're getting stronger. The associations are healthier. They're running them the way they should be. A couple of years ago, Fannie Mae came out with the requirement that all condo associations have to have ordinance and law coverage. And that's the coverage that will take your vintage condo that you have replacement cost coverage on and add an additional 25% coverage to bring it up to the current codes. Or if you say you have a condo that burns down and it's going to cost money to demolish the rest of the building, that's the kind of coverage that kicks in. Fannie typically will not purchase loans that do not carry ordinance and law coverage. We have a source that will buy those loans at current Fannie Mae rates. So do not be afraid of condos. Call us.
Good information.
Oh, yeah, we'll do non-warrantables. I'm doing a non-warrantable right now on Boca Ciega Point. Boca Ciega Point is a non-warrantable condo because they have a recreation lease for their amenities. Fannie Mae will not purchase loans in condos that have rec leases. I've closed 5 loans in Boca Ciega in the last couple of years with a rec lease, and they're not funding 10% per year towards budgets like Fannie requires, but their financials are healthy. So we have a source for non-warrantable condos. The one thing that we do not do is condo tells. Condo what? Condo tells. That's where you have your on-site rental desk and your one-day, rental.
Towel service.
I just don't have a source. And truthfully, people that want to buy them and get financing, I find them to be dreamers. They're like, oh yeah, I'm going to buy this condo and make all this money. I can stay there when I want to. I mean, condo tells are really meant for cash buyers. They're not meant for people that need financing. So we don't do them, and I don't seek out that kind of business because they're impossible.
I like throwing this out there too, because it seems like everyone gets stuck on a short sale situation where Wells Fargo is a lender in the short sale. We have a great partner that her full-time job is to move those short sales through.
Oh, she's my best friend.
And Shannon has one right now where it's Wells Fargo on the other end. So instead of whining and crying and complaining because it's taking forever, she has been lickety-split. So I love to plug her because it's hard for her to share with people what she does, and if that could help someone. She's a member at Pro. She's just in the Pro directory. She's a member of GTAR. She's in the GTAR directory. So that's a great way to help you guys in a pinch with Wells Fargo.
And she's amazing. My own brother did exactly what I told him not to do. Don't buy in a flood zone and don't buy a short sale. What does he do? He buys in a flood zone, short sale. And it was a Wells Fargo, so I called Debbie. I said, hey, it's my brother. She's like, no problem. She had it done in 3 weeks, and the seller's like, I'm not ready to move. Yeah. We're like, too bad. Start packing. So Debbie's amazing.
Yeah, great. And other things too. We have a lot of resources, so think of us for that. If it's something that maybe you just want our advice or you want to know how we would treat it or who we go to for stuff like that, we'd love to be your got-a-guy contact.
And we're more than happy to do it. Cindy Hayden is one of my good friends, and I am her go-to lender, and she'll direct business to me when she can, but she can't always. I am always more than happy to answer questions for her. If she has a lender that's doing something that doesn't make sense, she reaches out to me all the time, and I'm more than happy to help her out answering questions that another lender might be doing on one of her deals. And I do that with all of my realtors. One of my realtors called this morning asking a question about something another lender's doing, and is it allowed, is it okay? So, we're more than happy to be your partner and help you whether or not we're doing the business with you.
Even if it's at night or on the weekends, I always answer my phone.
Yeah, and I'm glad y'all said that, because you can't be in this industry and partner with realtors and not understand your timetables and your time schedules. You're busy in the evenings, you're busy on the weekends. So I've had many realtors come to me and say, okay, well, you know, bank ABC closes at 5 and now we need pre-approval and we need this done. To be in this industry and you want to partner with realtors, you got to partner with realtors. So we love doing open houses, we love doing caravans, we love doing flyers. Anyone that's on Rate Plug, I encourage, I know a few in the room, partner with Denise. She loves it. She knows right away what's going on. She can reach out to you and get stuff to you. We are available on weekends and nights. When you want to partner, you got to give it 100% or not, and that's pretty much where we're at. So, Tom?
Yeah, I just want to bring to the forefront the Realtors Care Foundation again. The $5,000 grant can be applied to any of these renovation programs as well, because it's not like
it's a gift, not a loan.
It's a gift. It's not like
a loan,
or a bond or anything of that nature. So if you've got a buyer that needs some help where their down payment or closing costs and things of that nature, get on the Facebook page, Realtor Care Foundation of GTR, and take a look at the criteria. And if they fit that criteria based on the number of people in the family and so forth, apply for the $5,000 grant, folks. Utilize it. That's what it's there for.
Is it just GTR?
Yes.
So
Pro has their own foundation. So each association that has agreed to do this down payment assistance has their own foundation. So everything that you do through GTR has to be within Hillsborough County. So anything that you're doing through Pro has to probably be in Ellis County. So basically you have to check and see if your association has the 503C nonprofit corporation.
Great, great, great. Okay, well, I want to again thank Bob and Sarah and Jim. This was such an awesome opportunity to be in front of you guys. Hope you got a little bit to walk away with, probably more questions than answers. So if you want to at some point do a one-on-one for a recap or refresh, or just to ask maybe some questions that you didn't get out in the meeting, you know, let us know. We are more than happy to do a one-on-one or face-to-face at any point. And we will be on Future Home Realty's University, so go check us out for a refresher. And thank you for the opportunity, everyone. We really appreciate it. Oh.
If I have an 802 credit score buyer that has a 20% put down, can you guys do that loan?
We'll have to talk about it later.
Very good.
I think. Yes, yes. We love the good stuff too. Don't make the, yeah. Thank you.